Okay, so in respect to the question you asked this afternoon, so I noticed you're having issues in drawing trend lines. Okay, so we have four basic rules. These rules are carved out by me. It's not that they are static or anything. Anybody can cover their own rules from experience, you understand. First one, you need to make sure it is a trendy market. Okay, by trendy market, I mean the market should be moving like this properly. This is a clear uptrend. Okay, and then this is a clear downtrend. So looking at this level now, it is very easy to plot a trend line. Okay, you notice that the market is either going up or it is going down. So this is a trendy market. So the trend line, you have to connect two areas. You connect this first area and the second area. Same thing with the lower trend line, first and second. You have to connect them. Same thing if the market is making lower lows. Okay, so let's say you are in a live chart and then the market should be, to confirm the trend. If it's an uptrend, the market will be making what we call higher highs. I've mentioned that countless times. Higher highs, like the market will make a high and a low, high, low, high, low, high, low, high, low. This is a perfect trending market. Okay, the market is trending in this situation. Now you make sure that you have two areas that can be connected by the line. You go to your technical tools section and drag it. Okay, you just connect it. So your goal is to make sure you connect the two areas like this, like this, like this. Okay, then at any point in time there can be a breakout. At any point in time there can be a breakout of the trend line. Okay, and trend lines are not static, they are adjustable. So rule number one, make sure that the market is trendy. Okay, so make sure it is a trendy market. One, trendy, trend, this is making a good trend. Okay, rule number two, connect two areas. Okay, rule number three, they are not trend line and are not static. Let me use the word static or stable or constant. They are not static, they change. Okay, so as they are changing, you are also adjusting it. We will go to a live chart where you see it this thing. Okay, and then the fourth rule is, okay, let me say, okay, these are just the basic concepts, dosha. It's not any, like I said, I'm just the one that carved out these terms on my own. Okay, make sure the market is trendy. It is a trendy market. Trendy. Make sure you connect two areas just like I shown you initially, and then you have it in mind that the trend lines are not static, they are not constant, they are not just stable, they are not redundant, they are not dormant, they change constantly. Okay, so let's go to a live chart and see how we can plot this. And two, have it in mind that support and resistance, I always tell you, trend lines also work as support and resistance. Okay, so the market is moving like this, always know that the top is this resistance, down bottom is support. Okay, and these are your reversal points in the market. All these are entry points. But you don't just enter because it is moving like that. There are other factors you need to put into consideration, just like I've shown you in the other, in our second to the last class. Okay, so let's see a live chat so we can explain these things proper. And two, second, have it in mind that support and resistance is not a single line, it is an area. Okay, it is an area of value. So if you are drawing a trend line, you have to plot the complete area. So this is the complete area of support, this is the complete area of resistance. Okay, resistance, support. All right, so let's see a live chat, please, so further confirm these things. So this is a live chart. Okay, so looking at this chart right now, what are you seeing? You can zoom out. You can zoom out the entire chart in order to have a glimpse of the current market situation, okay, or the previous market, as the case may be. Now looking at this chart, I can see a clear downtrend. Okay, I can see a clear downtrend. And you go to the technical tool session, which is here. Okay, click there, then you bring out either trend line or the line for a shorter one. Let me just, this is for this small area, this is a trend line. Okay, let me make it bold so that you can see it clearly. Okay, bold, thick. All right, let me clone it and then drag it down to, in order to plot the second. Okay, so the first rule is for you to connect, make sure you connect two areas. Okay, make sure you can see two clear levels that you can connect before you plot your, before you draw your trend lines, please. Okay, so your trend line should connect two clear levels, as you can see here. Now look at, this is one touch, this is another touch, this is another touch, and this was where the chart started from. Okay, you can see several touches there. Okay, and make sure, have it in mind, like I said earlier, that the support and resistance is an area. It is not a, is not just on a single line, because the trend line also represents levels of support and resistance, but this time around on a trend line. Okay, it also represents levels of support and resistance, trend line. So this is the complete area, if we are going to draw the complete area. But most times we just ignore the wick, but we are paying attention to it. So for you, please add the body of the candlestick, including the wick of the candle. Okay, including the wick, please. Include the wick of the candlestick. So trying to properly get the area here in this situation. I just want to make it bold and thick for clarity, so that you can see what I'm doing. So the main concept is for you to just make sure you are connecting two areas. So you can see in this situation now, I've drawn the complete areas. Okay, I have included the body of the candlestick and the wick of the candlestick. You can see clearly I've included the body of the candlestick and the wick of the candlestick. Okay, so this is for this small situation. This is a trend line. As you can see clearly that you can see how the candlesticks are moving within the area. You can see this is the movement. Finally, there is a breakout here. Okay, and the market pushes down. So let me move this chart up a bit. So you can see, I think there is another clear level here. So look at here. You can see this is a downtrend again. Okay, you connect two areas. Connect both the body of two areas. Okay, and then the lower side also. Okay, so let me make it bold and a bit darker for clear visibility. Okay, all right. So you can see this is another clear this is another trend line. So this is how you can draw your trend lines, please. Very simple. There is no big deal here. Just make sure you are connecting two clear areas. So you are not going to master this thing overnight. You are going to master it with time. Okay, so with time you are going to master these things. So it's not something you master, but pick out this topic one after the other as I am teaching you. Today, just wake up, just say, okay, I want to be drawing trend lines throughout today. That is just what I want to do. Don't trade. Just draw trend lines. Draw horizontal lines. Okay? Draw trend lines, draw horizontal lines. Plot them properly. Let me change this chart. Let's look at another chart. Let's go to the forex market. So let's open Euro US dollar. Today is Wednesday. The market is running 24/7. We all know that. Until weekend when the market closes. Okay. So look at this is the Euro US dollar chart. So at this time there is a lot of volatility in the market. Let me increase the time frame to 1 hour. Maybe we can get a clear situation here. So there are times, and two, exactly the fourth rule I was trying to remember, rule number 4, don't force trend lines. Please don't try to force a trend line. Don't imagine it. The chart should be clear. It should be clearly expressed in your eyes before you plot any trend line. Okay, don't force it, please, because by the time you force it, you end up drawing something that is not working. Like in this situation now, it is clear that this is an uptrend. Okay, it is very clear that this is an uptrend. So in this situation, let me zoom in rather. Okay, let me make it black. Let me just make it dark and bold. Okay, so in this situation the trend is not really that clear, so you may find it difficult in plotting the trend lines. Okay, so looking at this level, you are expecting the market to touch the next point, which is here, because you have connected here and here already, but the market didn't get to this point before reversing. So sometimes it happens. Okay, sometimes it happens. All right, so looking at this again, as a professional, what am I going to do here? I'm seeing another trend line formation here. Okay, I'm seeing another trend line formation. Okay, so you can see this is also a trend line. So you make sure the market is trendy. Like I told you, trendy market, the market should either be going up or it should be coming down like this. You can see that this is a clear trendy market. Okay, like these are levels of support and resistances on a trend line. You can see this is a higher high, this is a higher low, higher low. Okay, this is another high, this is a high, this is a low, and then currently we are seeing a high. Okay, so if you connect this like this, you can see a clear trend line. Okay, this is a low here, so you can see very clear. Okay, you can see that it is very, very clear. So don't force trend lines, please. Don't force it. That is the fourth and final rule. Make sure the levels are clearly visible, and make sure that it is connecting more than one area. Okay, make sure it is connecting more than one area. Okay, so you can see here I've connected 1, 2, 3, and for the fourth time the market is going up. So you can see clearly that each time the market gets to the level of either support or resistance on the trend line, it is reversing. So it is also a strategy if you see a reversal candlestick. Like in this situation, the market got to this trend line, you can see a reversal candlestick here. Okay, this is a reversal candlestick. Okay, we can just call this an engulfing candle. This one can be a spinning top candle, and then the market pushes down to the next level. At this level, you are seeing it that the sellers are getting very, very weak and low, and you are seeing a type of hammer candlestick here. Okay, and then there is a push to the upside. So that's by the way, we are not talking about the movement of the market. We are just talking of how to draw trend lines. Okay, how to draw trend line. Okay, on this chart is not really clear, so like I told you, you don't force the trend lines. If it is not clear, you leave it. Okay, you can see there is another there is a level here. Okay, so all these things you are going to master it with time by mainly looking at the charts. You will know the market is going down or it is going up, and how you can plot your trend lines. Okay, so you can see in this situation, you can see that the market is bouncing off from that level. So you can see it is bouncing off. Okay, you can see eventually there is a breakout, and this breakout looks very, very strong. It looks like an institutional candlestick. Yes, there has been a news release at this particular time. So you can see I'm not on the chart, but looking at this market alone, I know that it is as a result of news. Okay, looking at this, especially this situation here, especially this one here. So there has been a news release here. That is the only thing that will make candlesticks to behave like this, as a result of news in the market. Okay, so you can clone it. If you tap it, you can click on this particular sign that look like a copy sign. Okay, on your computer it looks like copy. By the time you click it, you have cloned it. You can see. So this is the complete area of support, or the trend line. Okay, and then let's see if we can connect the top also. So you can see I've connected the top. So basically, you just find a trendy market. Okay, once you see a trendy market, the next thing is for you to connect two areas, or if you are drawing the trend line, make sure that you have the most number of touches. Okay, make sure it is touching most of the levels. Okay, make sure it is touching most of the level. That is, you have more touches. You have more touches. You can see. This is how the market is moving. You can notice that the market has been moving within that area until finally we see this breakout here. After breakout, if you notice, it worked as a resistance. Okay, like I told you, if a support level gets broken, it works as a resistance. If you wait patiently, it's going to work as a resistance. You can see that the market broke here, goes back to the same level, and then again before it started moving, forming this new trend line that we draw here again. You can see. So this one is a 1 hour chart. Let me look out for another currency pair. Let me see Great Britain pound against the US dollar. Okay, so looking at this chart alone, you see a clear uptrend on a 1 hour time frame. You can see that this uptrend is very, very clear. But if you look now, there is no clear trend line for you to draw here. So avoid drawing trend lines that are very, very steep like this. Very steep. Okay, don't force it. Make sure the market is trendy. Make sure it is a trendy market. So you can see this is actually a trend line, but it is very, very steep, and you cannot connect the top. You can only connect the bottom. So it is not a clear trend line. Okay, it is not a clear trend line, but you can look at it and consider the market to be an uptrend and find other alternative ways in which you can buy. Like here now, you can see there is a resistance level here. There is a resistance level there. Okay, you can see there is a resistance, and then there is a breakout also. You can see a breakout. So at this situation, you can continue to push the market upward. You can continue to buy, go with the buyers. Okay, let me remove this. So if you are drawing a trend line, make sure the market is a trendy market that you can connect at least 1 or 2 areas. Okay, let me change it to 30 minutes time frame, candlestick rather, not time frame. So I've changed it to a 30 minutes chart. Let me see another pair. This is US dollar against Japanese yen. Okay, so there has been some major news release also. Okay, so if you look carefully, you will see that this is a downtrend market. Okay, it is going down. So but there is no clear trend line to draw here, but this is a downtrend. Okay, so like I told you, you don't force the trend lines. Don't force it. You don't force yourself to draw the trend line. If it is not clear, you just leave it. Look out for other alternatives. That is why sometimes there is no trend line here, but looking at this market, this is a downtrend market. I can spot something here called a double top pattern. I've taught you about double tops. This is the first top, this is the second top. Okay, so if you connect those areas, you will see that the market has formed a double top pattern, or what we call an M pattern. Okay, I'll make it bold. Okay, So let me clone it. So you can see this is the complete area. So if you look carefully, you will see this is an M pattern in a downtrend, indicating market wants to continue to push downward. Okay, now what are you going to look out for? You look out for the neckline, a breakout of the neckline. But before the market broke the neckline, you can see that at this area there is a strong sellers here, which form another level of previous level of resistance, which will now turn support. Okay, so you can see now it's formed the neckline in the market. Let me just cover this area. So you can see that's the neckline. Let me just make it black and a bit bold. Okay, okay, so let us leave it at that. So that's the neckline. The lower line I draw is the neckline, this complete area here. So I've taught you about the neckline. This is the neckline. Okay, now a breakout of this neckline, a breakout like this, okay, you can wait for the market to go back to the same level and then you open a position to go with sellers, because generally you are seeing a downtrend already and you are seeing a double top pattern already. Confirming the double top pattern is this engulfing candlestick, a bearish engulfing candle. After this bullish candlestick, you are seeing a bearish engulfing candle, and then this is the neckline. The market came down, broke the level, retrace a bit, and then pushes to the lower side. Okay, so there's no clear trend line, but we are seeing a double top pattern at this time. So you don't force the trend line. Okay, so but at this time, for this small situation here, you can see there is a trend line. This is actually a trend line for this small situation. So the trend line must not really be for an overall chart. It can be for a small chart at that particular time. You must not necessarily go way back to the top looking for what to draw. Okay, so this is also a trend line for this situation. So you can see. How do you know that it's a trend line? The market is getting resistance at this level. It's getting resistance there. Okay, that's the level of resistance. You can see the market is moving like this. So you can see. So you can see it is a trend line. If you plot it, this is what we call a descending triangle. Okay, the market has formed what we call a descending triangle. So a breakout in either direction, especially on the lower side, will give you a clear direction of the next market situation. Okay, so adjust your line to get the most number of touches. Okay, so I will just leave the body. I'll just draw just the wick because it's a small situation. Okay, so you can see this is a descending triangle. Let me make it bold and dark. So you can see this is a descending triangle. It is a descending triangle because it is a downtrend. Okay, so this is a triangle. Let me see very well. Okay, so at this time the market is moving within this area. This is a 30 minutes time frame. So a breakout of the market from the lower side, if we see a breakout like this, If the market breaks this level with a strong body, okay, it is a confirmation that the sellers want to continue. If we see an upper breakout with a strong bullish body, okay, a strong bullish candlestick, it is a confirmation that this. Okay, so I'm on the New Zealand dollars against the Japanese yen. Okay, so this, let me zoom out so you can see clearly the chart, the market. You can see the present market situation is uptrend. Okay, so it's an uptrend, and the uptrend started from here after spotting this weak hammer type candlestick, and then the next candle was a bullish Marubozu candlestick, and a very strong candlestick, indicating the buyers are now ready to push the market upwards. Okay, initially the market was going down, but as it is going down, if you notice, the sellers are getting weaker. Okay, so you can see how the market moves. Okay, so this is an example of a flat market. Okay, the market is moving within a range. It is moving within a range. Look at the range of the market. Okay, so if I want to include the body, let me include the body of the candles to show the complete area, so that you also be having the knowledge of how to draw complete area of support and resistance. All right, so look at it now. So this is an example of a flat market. A flat market, like the market is moving within a box. Like, for example, this is our support and resistance level. This is resistance rather, and this is support. And then the market is moving like this. It goes up, down like this. So this is a flat market. This is an example of a ranging market. We call it ranging market, or some people call it flat market. And which other name will I remember again? Okay, so if you look at it, this is, you can see that the market is moving like this. Okay, so this is a flat market. Let's look out for other clearly visible examples. This is another flat market. Okay, this is it. Let me remove other. This is a flat market. Okay, I'll just change the color. Okay, so this is another flat market. As you can see clearly, the market is moving within the box. Okay, and see, before eventually it broke. So in this situation, if the market breaks to the upside, most likely the buyers will continue to take the market upwards. Okay, if the market breaks downward, most likely the sellers will continue to push the market downwards. Okay, so let me look out for other possible examples of a flat market. Okay, I just believe the concept of that flat market should be clearly understood. Now, we used to have bad markets. Okay, there are times when the market will be very, very bad, and those are times when the volume is very low. That is why it is advised to trade when there is a cross of between two different trading sessions, like the New York session and the Tokyo session. Okay, like the New York session and the Tokyo session, or sorry, the cross between the London session or the New York session rather. The cross between London session and New York session, or a cross between the Asian session and the American session. Because at this time there are more traders in the market. The volume of the candlestick will be very, very high. Okay, by volume I'm talking about good candlesticks formation. Okay, the market will be trendy. The candlesticks will be very, very clear. Okay, you won't be seeing something like this. So at the beginning of most trading sessions, this is what you will be seeing, scenarios like this. Okay, you'll be seeing small candlesticks with so many wicks, so many rejection points. Okay, let me see if I can go back to the opening of this session. Today is okay, this I've even moved this chart back to last month. This is June already. Okay, so in this type of situation, you don't trade, please. Don't trade in this type of market. Look at this, is a bad market. The volume is very, very low. You can see that the candlesticks don't form at this point in time. It's saying the market just open, or the activities of traders at this time is very, very limited. You can switch to 5 seconds or 1 minute to see the market on a very lower time frame. This time around you will see a lot of doji candlesticks. So in situation where you are seeing doji candlesticks like this, you just know that you are seeing weak candlesticks. Okay, just know that the market is very, very bad, or you are seeing so many wicks. Okay, look at what I'm saying. You can see this doji 1 2 3 4 5. You can see this doji candlestick. You can look at this particular market also. Okay, look at this doji candlestick, doji candle, doji candle, doji candle, doji candle. Look at them. So this is a bad market, a very bad market. So it's not advisable. Look at, you are not supposed to trade in this type of situation, please. Okay, look at, you are seeing so many wicks and so many doji candlesticks. You are seeing different types of dojis. You are seeing the 4-corner doji, the long-legged doji, the dragonfly doji, and the gravestone dojis. Y'all, okay, look at them. So this is a bad market. It's not a good market, and mostly the market used to act this way when the market just opened. Okay, when the market just opened, this is how it's always going to be like this until there is a cross, or until there is a cross between two different sessions in the market, or unless the volume of the traders, or when there are more traders in the market. Okay, when the market has good volume, at that time you'll be able to trade. Okay, so you can see. So let me look out for another currency pair. Let me see another currency pair. New Zealand dollar, United States dollar. Okay, you can see. So at this time, this is not a bad chart. Okay, let me change to 1 hour time frame. So at this time you can see good volume candlesticks. Okay, you can see the volume. The candlesticks are making good body. So by volume I mean the body of the candlestick. You'll be looking at the body of the candlestick. Okay, if you are seeing clear bullish candlesticks and clear bearish candlesticks, you should know that the market is good. The market is good, and you are seeing that the market is trendy. By trendy market I mean the market is making higher highs, higher lows, or lower highs and lower lows. Okay, you'll be able to plot your trend lines, or you'll be able to see if the market is ranging, okay, or if it is moving sideways. Okay, it is either a flat market or a ranging market, or you say the market is moving sideways. Okay, so all these factors are what you consider. So you can see good volume candlesticks. Okay, at this time around, you see that the volume is very, very high. Okay, another thing, you need to look at the market if it is respecting support and resistance. There are days when market doesn't respect support and resistance. So now if you have been taught about support and resistance, you will now realize that, okay, of the area of support you are supposed to be buying, while the area of resistance you are supposed to be selling, and you sold off and the market didn't, and the level didn't respect it. Okay, you will now be wondering. So that is why you need to plot your graph from two. Make sure you connect two different areas. Make sure you stick to the rules. Rule number one, connect two areas on the chart. Make sure to have good number of touches on the chart. 2 touches, 3 touches, 4 touches, if the market provides that long. Okay, always have it in mind that support and resistance, because constantly moving, is not waiting for you. Okay, the market is not waiting for anybody, so it is moving, continuously moving. So if the market is moving, you should know that the levels of support and resistance will be changing. Okay, just know that it is not static. Okay, just know that it is not static. And then the fourth and final rule, I mentioned it, I've forgotten again. Just keep my mind. Okay, I'm trying to restart the page. Okay, good, we are up again. Perfect. So make sure the market is respecting support and resistance. So how will you know that the market is respecting support and resistance? By drawing the trend lines, or the if the market is ranging, you draw the flat lines, or the range, or the box line, just to indicate that yes, the market is ranging. Okay, you can see now this is an uptrend. Okay, so this is an uptrend. So if you look carefully, you realize that the market is respecting the level. And two, if you are going to use support and resistance to trade, please don't use it more than twice. Don't use it more than once or twice. If you have used it more than once, that should be all. Or if you are in the market and you realize that the level has already been used many times, please avoid it. If the level has been used many times, avoid it, because the more the level, a particular level is being used, the weaker the level becomes. Okay, the probability of that level breaking will be very, very high. Okay, the probability of seeing a breakout will be very, very high, especially if you are seeing a change of character in the market. By a change of character, I mean a change in direction. You can see for a very long time, let me just push you can see that this market has been going up. From here we are seeing a minor uptrend like this, but from here now you can see that the market changes its direction, what we call change of character. The market changes and it started to go down. So how do you know that it has changed? By making lower lows. Initially the market was making higher highs, going up like this. All started from here like this. You can see it is moving like this. Suddenly it started moving like this. Okay, so look at the levels of support and resistance on the trend line scale. So you can see how the market has changed its direction. And then the area where the market changes its direction is going to give you a sign sometimes. Okay, it's going to give you a sign. And look at this particular area, the market was going up, but at this particular area we started seeing weakness on the side of the buyers. Okay, started seeing weakness from the side of the buyers, and then you give it time to tell you exactly what it is doing. So you don't create any idea on the market. Please don't create any idea until the market changes its direction before you can now determine, okay, yes, it is now a downtrend. By this time, you know that, okay, you connect this particular area, you know that, oh, the market has changed what we call its direction, popularly called change of character. Okay, in the trading language we call it change of character. So you can see that it is now going down like this. So what are you now going to do in this situation? Since you have seen a change of character, okay, you can see it is now going down. So the next thing, it is for you to look for a lower low to open a position if you want to move with the trend and exit. Okay, or the best thing is to wait for the lower high. Okay, you wait for the lower high. Like, by lower high I mean low, high, low, high, low, high, low, high, low. So you wait for this entry point here. Okay, and you open position for like 5 minutes. Okay, by getting confirmation. Okay, by looking for the reversal candlesticks at the level. You look for a weakness in the side of the buyers first of all, to tell you that yes, the level will not be broken by that time, at that particular time. Okay, after which you now look for a reversal candlestick, like a spinning top candle, a doji candle, an engulfing candle, a marubuzu candle. After seeing the weakness in the side, on the side of the sellers, okay, then you can open a position. Okay, you can open a position. So you can see it is a clear downtrend, but now the market has changed its character again. It has started going up again. So you can see the market moved down at this time, and now we are seeing another uptrend again. And then where did the market changes its character? You can see down here. You can see. How will you know? By looking at the new highs that is being formed, higher highs. Okay, if you have stayed for a very long time, you can connect two areas like this to give you a clear idea of the market direction. Okay, so you can see that the level, the direction has been changed, or what we call a change of character. So in this situation, the trend lines are not clearly visible. So what are you going to do is to wait for these highs here. Look for strong breakouts. Okay, like we have seen in this situation, a very strong breakout. Okay, so if you are seeing a breakout candlestick, you can wait for what we call a retest. Okay, so it moves like this, moves like this, a breakout. You can wait for market to retest this level, then you open your position. Sometimes the market doesn't retest. Okay, that is why if you are opening a position, you need to allow the market, your stop loss, you need to give it enough space. You need to give it enough gap, like what most people will call that. You should allow the market to breathe, because the market breathes in and breathes out. Okay, so sometimes it retests, sometimes it doesn't retest. You already know that this is a clear uptrend. Okay, maybe you are waiting for a retest and the market has not retested, and yet it has moved up, so you have missed that opportunity or that chance. So that is what makes trading complicated sometimes. It's also experience based. Okay, you'll now be looking at it, the person that taught me say I should wait for a retest, but there's no retest, yet the market is going up. You have missed the opportunity. Okay, so you open your position, put your stop loss. You already know your risk to reward ratio. Okay, and then you know that even if the market retests, it's still going to push upward. But if it doesn't push upward, it will definitely hit your stop loss and exit you automatically out of the market. Okay, so please make more findings, please make more research, do more study, okay, on these trend lines. Okay, so that's just it. That's just how you can draw trend lines. Just look at the trend. Is the market trendy? Yes. First of all, you can zoom out your chart like this. By the time you zoom out your chart like this, you will see that it is clear. Okay, you will see that the market direction is clear. You can see you don't need any prophet to come and tell you that this is show you the direction of the market again. One, after zooming out, you now zoom in. Okay, you now zoom in, then plot your levels properly. Okay, go to the technical analysis tool section. Make sure you connect two areas on the chart like this. You can see. I know that. Okay, this is a resistance level. You can see. So you can see the level of resistance. So most times, if there is going to be a change of character at this level of resistance, you will be expecting the market to hit that particular area like this, down, hit this area and go down. But you notice there is a breakout. Why? Because the market has changed character here. So each time there is a change of character, the level will no longer hold. Okay, be it support or resistance, it may no longer hold. And you can see the retest I'm talking about. The market came back, retested the level. You can see after the breakout. You can see after breakout, the market came back, retest the level. We saw buying signs, and then the market pushes up again. Okay, came down, goes up. So even if it is going down, you just know that it's going to go up eventually, because it's an uptrend. The character has been changed, or the direction has been changed. Okay, because the market doesn't go in straight line, or it doesn't just go up like that non-stop. No, it goes up, it goes down as a result of economic factors going on at the particular country where you are making that trade at that moment. Okay, so I just believe I've done justice to trend lines. So the rest is up to you. Please do your research, make your findings, do more studies. Okay, do more studies. All right.